Good morning. Happy Friday. Welcome to the Brew. I'm your host, Lex. Today, we're going to clean up a little bit of the crypto talk. I think Molly has another stock idea. We're going to find out. We may look at a couple strategies in some of these crypto stocks. I know we're going to talk about covered calls today and possibly get into butterflies. So let's stay tuned for that opening bell. Molly, I have no papers today. I can't hear you. Oh, you unmuted.
This is going to be a happy Friday because this is actually no papers needed. This is coming all from your brain.
Oh God, that could be very empty today. I can see it's also Black Friday.
Yes.
With our clothing, right?
Right.
Did we didn't even plan this.
My uniform on here.
So that's okay.
Okay, so we had a really good crypto week, and if you didn't check out we had a great interview with Will Klippel from Zero Hash. He was really informative, amazing, and we had a couple intros topics on Monday and Tuesday, and then insane options traders workshop on Thursday. So this was a really good week. One thing I wanted to bring it to a close on Friday is that it's great to know about crypto. It's great to know about any subject matter, but what are you going to do about it? And this is what makes this show so amazing, because we've got Lex. And Lex we've laid it up, and he's going to do an all-netter, and we're going to find a stock where if you want to get into crypto, you don't know how it works. You don't even want to go to Coinbase and try to buy some. You don't want to have a cold wallet. You're just into trading, but you kind of want to dip your toe in. We're going to pick a stock today that has a heavy investment in Bitcoin, and we're going to choose MicroStrategy, owned by Michael Saylor. Ticker is MSTR, and he's invested about $4.5 billion in Bitcoin at the moment, and he started buying that up in August of 2020 as quantitative easing came in as a bit of a hedge against some fiat currencies. So I think if someone's just dipping their toe in and they're confident in Bitcoin and they're just want to collect some rent on the way to its growth, what strategy would you pick?
All good points. Let me just take one step backwards, right? So I think the reason that MSTR MicroStrategy becomes a Bitcoin play, right, is because Saylor, am I saying his name right?
Yeah.
Saylor? Yeah?
Yeah.
It's not spelled like sailor, like a sailor.
I'm
wearing my sailor outfit next week, by the way, just so we're clear.
Okay.
I will have a sailor outfit.
You were wearing Zero Hash green on Wednesday. That was
that
was very kind. That was nice.
Again, unplanned. So this guy Saylor, he goes out and buys it looks like 125,000 Bitcoin. Did you say that already?
Yeah, and I think it's growing. I think it might be up to 100. Yeah. 130.
So that is I forgot what you said. Is that a $4 billion investment of sorts?
It was $4 billion, but I think it's growing up. It's probably $4.5 billion at this point. We have to check those numbers. It's fluctuating all the time. But Bitcoin is trading at about 29,000.
Okay.
So
that's a big number. The calculator.
Yeah. Yes, the orange calculator.
I know. So I guess my point is this: when you as a company have such a large holding in that asset, Bitcoin, all of a sudden you become a Bitcoin play, right?
Right.
Now the problem with it is, of course, you meaning we, the retail folks, are going to be the last people to know when he unloads that thing.
And he's no longer
a Bitcoin sort of play anymore.
That's a good point, because that's a perfect comparison of what, commodity versus security. So Bitcoin itself as a commodity is driven by, market demand because there's no one guy that owns it. No one knows where Satoshi is. And then, Michael Saylor tomorrow can sell off his Bitcoin, and that MSTR is a security in that sense because there's a guy out there who can affect it.
Right. So my point here, though, is this stock has the potential of being monsterly volatile, right?
Yes.
So, you could wake up one morning and the news could come out. Michael Saylor just sold 100% of his Bitcoin holdings. And if you have that as a play because you love Bitcoin and you want to do this as a facsimile,
Right.
you could potentially have a bad day. Now, you can set up option strategies, right, that just do wonderfully from a binary move, either up or down, right? And those are straddles. And, again, we're not going to get into straddles today. We're going to talk about some covered call sort of stuff and a little bit of butterfly.
Could you explain what the straddle is? So why that would be good for this position?
Yeah. So I'll tell you what, let's do this. Let's go to the trade hawk machine. Have a look at that. Let me just put one in here while I'm at it. I like doing things in 100 lots, by the way. It just makes me feel so big. Oh my gosh, he's so big. Holy cow. Okay, let's put this in strategy. So what are we looking at? Yeah, we're looking at trade hawk. So what I'm doing is I'm creating the straddle. I said a straddle, I think, right? Oops, you know what? I don't like this one, Mal, because it's near term. We're gonna do one that's with a few days to go. So I'm gonna pick, if you can see my mouse, these are all the expiration months. This is how an option chain is organized. We call it an option grid. I keep pointing up to the sky because my computer screen's way up here. We call it an option grid. So when I click on a month, right, September 15th, it's 35 days. It tells me what the implied volatility is there. Okay, again, that's a show we'll get into. But a straddle is buying the same strike call and put, okay, together, right? And I'm doing it from another spread, so I got to erase it. So what I'm going to do is I'm going to buy the 380 call. And typically, straddles are at the money. They're the 50 delta option. So the at the money is the 50 delta. The call and put are very close to the same delta, okay? And on the screen, that orange band, I guess it's orange, represents the at the money option. It's the option in the chain that is closest to the current stock price. Okay.
And even though stock is volatile and can swing up and down, you would still choose a strategy close to at the money.
It depends, right? So that's a good question. It depends. I think that you can pay less premium. If you look at my screen right now, this limit price is $59. Okay, for the straddle. That's the sum of the call and the put together. That is all extrinsic value premium for the most part. It is literally a gigantic price to own a straddle. Think about it. For this straddle to be profitable at expiration, we got to move $59, $59.50 from where it is now to make this worth just break even. Now, I'm going to throw a caveat on that, what I just said. Between now and September 15th, when this thing expires, we can have massive moves up and down, in which case the implied volatility of this spread will probably stay elevated and potentially go higher, right? So that 59.50 in this example could be worth very much more in the short term or along the way. So you can get movement along the way and then scalp what we call gamma. Well, again, another higher level concept. We'll talk about it at another time. You can scalp your gamma and make money on this thing before it expires, where it's going to expire. So we need about $60 one way or the other, ultimately, to see a break even in this. And that's kind of a big move, right? I'm not sure what the ATR is in this thing. I'd have to look that up. I should have done that. But my guess is it's just looking at it, I'm guessing it's $3-4 a day, probably, maybe more. So this is what this straddle looks like. So let me send this over to the what if machine. What if is our risk analysis tool. And look at this. This is nuts. I need more prices. I want to put some more prices in here. So yeah, this doesn't look. It's all underwater right now. This crazy thing, because it's got to move so much. Let's go 100 down on the low end. Whoops, hitting the wrong computer. No worries. And then we're going to go That's pretty good. 550 upside. Right. You see what I'm doing? I'm moving my my ranges so we can see more stuff. And I'm hit calculate too. Okay, now that's better. Why do I think that's better? All of a sudden I can see green and red. But you see what I needed to do. So these break-even points, can you see them on the screen?
Yeah.
320.51, 439.51. That's a big range, right? And there's a 50% roughly in the middle there that we stay inside this range. And that's what that red represents. And if you can see the percentage in red, that's the probability that we stay within that range, 50%. So you have some percent that you can go way below and some percent that can go way above. It's about 50% as well. So this is a tough strategy. I find this one to be something I would not do. I'd probably do the opposite of this and sell it. So it would be flipped over. But, having said that, if we wake up one day and you have this position on because you think Michael Saylor could decide to throw out all his Bitcoin, his stock's going down pretty handily, right?
Right.
Potentially. So you might experience something. And look at the numbers way to the left. There's some big numbers on the wing. So this needs movement. This is something we need chaos. This kind of a spread. That makes sense?
Yeah. And
you look mystified.
I am. So just to take a break, there was this video of this German Shepherd, and he's being trained to only catch a specific ball. And so he's at the net, and balls are flying past him, and he's waiting for the ball. And then at the very end, after 50 balls, he catches the one. And I'm like, that's me listening to Lex. I'm trying to grasp something I can catch.
Yeah. No, these, you know what? And we spoke about this on a previous episode, right? The concept of long premium, buying it versus selling it short premium. If we go back, to what we talked about back then, from a market maker standpoint, we were typically on the short side of premium, meaning we were sellers of it. We wanted to take advantage of time passing, and those options are naturally wasting assets. They decay. So if they decay, they get cheaper. So we're selling things up here, and it decays like ice melts, and we buy it back when it gets lower. That's typically the kinds of positions we would be in. Now, not always, but we would typically be in something like that. So we had to be in the business of managing those wings to some degree because we don't want to get, surprised, which absolutely happens to market makers. You get surprised once in a while. So we typically were on that short side of things, right? And we just knew that going in. So we had to manage all of our inventory all the time in terms of curbing risk on the wings and that sort of thing. So we would end up buying things, and that's why we would get into butterflies, right? So we would have positions that are the opposite of this one. Say, hey, I can't have this risk way down here. Boom, boom, boom. Start buying in these wings, and all of a sudden we have what looks like a butterfly graph. Might not be a butterfly per se, but it starts looking like one. Does that make sense?
Absolutely.
Okay. So I would tell you, and the other thing I want to look at, we're going to go to the market. Not yet. Let's not go to the market yet. Give me a second. I want you to see something in this MSTR too, and then we're going to look at BIDO. And BIDO or BIDO is the Bitcoin ETF. Is that right?
Yes.
It's BITO is the ticker. Assets under management 10 billion. Right? Pretty significant, I'd say. It says that BIDO holds Bitcoin in reserve. What does that mean?
That would mean like they buried gold under the ground. So, and let's check on that.
Yeah,
there's a lot of terminology like custody and what have you.
So an ETF is an exchange traded fund. It trades like a stock, right? The beauty of BIDO, since it correlates directly, I believe, to Bitcoin, is that you don't have to go mining for coins. You don't have to own a wallet. You don't have to do any of that stuff. And for me, that is wonderful. I'd rather trade something like this. It's regulated. It's about the only time I'll ever say regulation's any good. So it's regulated. It's an ETF. It's got $10 billion behind it. I just it settles every night. I know there's options on it, so I know the options are going to settle. OCC is going to guarantee those things. all of the good news about the ETF BIDO is right in play for someone who likes to trade options. Okay.
So what? So let me ask you this. So I tend to zoom out and look at a 5-year trend just to see what it's hold. Do you think that's a bad idea? Better to look at what's happening in the moment, or is it, or do you ever
No,
go that
that's
far
a good
out?
question. Molly, you're full of good questions today. I mean,
Thanks,
you got
Lex.
all
I
you
really
got all the good
appreciate
ones
you.
today. Jeez. Let's go back to Trade Hawk real quick. I have, let's see here. Let me see if I can get, I don't know how many days I can get. Let's see. Are we looking at it? Yeah. So I got BIDO up on the screen. So I'm not going to go 10 years. So how many days? 5. I don't know how many I can go. Let's go 1,000 and see what happens. 1,000 days. Let's see what we look like. Okay. So this is BIDO over 1,000 days, right? So that's, a
Okay.
number of years. So you tell me what you're doing here. I mean, today, which is the right side of this graph, right? We're down at, what is that? 1522. Our
Yeah, let me
high up
see.
here is our high up here is
Those are
44, 44 and change. So this was a
yes, yeah.
long time ago.
I'd love to see before quantitative easing happened for COVID. I'd like to see what this was doing in like 2019. The
Yeah,
uptick
I have
in
to go.
Bitcoin probably started happening. I think the first QE in
Mhm,
2020 was March.
right.
I'd like to see how it's moving as a hedge.
Yeah. So your question though, and we'll do that. We'll take a look at that. But your question is, are you using some sort of technical indicators on this thing, right? Are you
Oh,
there, Mo?
me? Yes.
Yeah.
No, I'm just more looking like what is its from when it was born to now. What is its
Yeah. I mean,
overall? Yeah.
we're at lows from when it was born, but over the last, I don't know, 52
I
weeks, we're
guess
kind of on the upper end of it over the last 52 weeks. So the last
yeah,
year.
I guess I'm more a fundamental trader, and so my technicals are very light, and so hence the zoom out. So
Yeah,
I'm just
that's
wondering
okay
if
though.
that, yeah,
Yeah, that's okay. I mean, look at as I told you on another show, this stuff is all, Gaelic to us. These charts, we never use them. We don't care about direction. We market makers, right?
right,
We retail traders absolutely care about direction. So you're going to look at what we have is we have folks who say, okay, I think, and I'm totally making this up right now, but this is a resistance line, right? Right there, I'm going to say. So you can see it says resistance 1815. So that's a resistance line over, the 52-week part. So there's retail folks who believe this, and I'm not saying it's wrong. There's nothing wrong with that. Some of this stuff could be self-fulfilling, but if you want to have a resistance line and make a trade, you could make a trade with options that get you short safely up there, and also can take advantage of that theta number and that premium of being shorted. So the typical spread for something like this, as per your question of what would you do relative to some sort of resistance or technical, we could sell a call spread here, right?
okay,
So if we sold a call spread, we're talking about 1815 as the number, right? So let's go back to the option chain, and I'm in September again. So the 18 call is right here. This call right here. So it's only 12 cents. So I'm not trading this there. What I'm going to do is I'm going to try to get a little more meat for the spread. So I may end up doing something like selling the 15 call, which is at the money now, and then going up a couple strikes and buying my protection on the 17. So now I have a $2 spread that I can do for 48 cents. Now that doesn't sound like anything great, but this is a small priced stock. So the
yeah,
numbers on the options, even with a slightly high volatility, you're just not going to get massive numbers in this. Before we go to the markets, the next thing to look at, this open interest column. Remember, we did a show on this as well. Look at the numbers here. And my magic number was always a 4-digit number. And we're seeing, 4,900, 7,000. We have a 5-digit number up here at the 18 level. That's also telling. There's a lot of trade at that resistance point, 18. So the volume up here is the biggest at that. What we noticed was the resistance point on our graph.
yeah,
Interesting how that happens, right?
right,
So if you're looking at this, you might be able to see in open interest where people think there's interesting inflection points. To me,
got
looking
it.
at this without ever seeing a graph, I could say 18, there's something going on at 18. I don't know what it is yet, but I know something's going on here. if I made a determination to get, short in this area, I like my 15-17 spread because I get a little action on it, a little juice. If I moved it up one strike, I'm going to get 27 cents. That's okay. Not horrible. Not horrible. I like to get around for these spreads. I love to get 30 to 40% of the spread difference. So 16 to 18 is $2. So 30%, I want to get 30 to 40%. So let's call it 35%, right? Just to be, I want to get 70 cents for that spread. I'm nowhere near that, right? Nowhere near it. So this is too low for me. Most likely, I'm at 27. I'd like to get 70. Now look at it. Will I take lower? Yeah, I will. But I'd like to see about 30% of the strike difference in terms of my premium that I'm going to sell.
Okay, got it. I have a question.
Make sense?
So we were,
Yep.
yeah, we were talking to, thanks for that. We were talking to Kirk from Option Alpha, who is going to be coming on. Very exciting.
Mm-hmm.
And he referred to a guy named Tom Basso, and that the big way to trade is position sizing. What do you think about that?
I think it's awesome. I think it's
Okay.
I think it's one of the most important things to understand. And we're going to have a guest on down the road, a gentleman who his whole strategy is built around sizing.
Got it.
Yeah, and the concept clearly is you don't want to overextend your capital to do stupid things. And many people make that mistake, especially retail folks. They tend to overextend themselves, and we can't do that. So if you have a discipline where you're using the correct amount of capital for your trades, you generally keep yourself out of trouble, right? With that. And then you can actually have more clever things on if you're very cognizant of position sizing, right? To me, it's an act of discipline. And if you don't have a discipline trading like this off floor on a screen in a bubble, in my case, I'm in a tube where no one's here. So you go crazy. You got to, there's no one to talk to. So you have to have discipline, right? And that's one of the main disciplines is that position sizing. We'll delve into that with this person when we have him on as a guest, though.
Okay. I think that's probably a mistake that young traders make because they don't want to manage a lot of positions. Because they're just getting their feet wet, but they really want some income. They want to see this thing moving. So they probably put a lot into their whole portfolio in a few positions. So diversifying and balancing that out is probably key.
Yep, for sure. Okay.
So do we have time for I really would love to see a butterfly.
You would?
Do we have time? Yeah. Do we have a time for a butterfly?
We have time for a butterfly. Yeah, let's do a butterfly. So if we go back to TradeHawk, where did I have my butterfly? My butterfly. I think it was Tesla.
And we're supposed to say fly, right?
Yeah, the cool people say fly. Yeah, you got you got yourself the 45, 60, 65 fly on. That's what the cool people say. All right. So what I did is I put some flies in here. So let's just look at a straight long butterfly real quick. We're going to do the turbo version here because we're running out of time. Yellow graph on the screen is expiration. Green graph is today. In our product TradeHawk, you can move all this stuff around. You can do a lot of analysis. As you can see, I use this what if a lot, especially for teaching. It's terrific. Important notes here. You can see the zero line of P&L. Okay. You can see where the high point is. And again, this is visual. You can see where the break evens are. If you need to see this graphically or tabular form, I should say, you can click a little button. You can see all that data. I like looking at the picture better. And there's all kinds of things you can do with this, but notice where my zone is, my happy zone. It's in that green section. It looks like I have the 40, 45, 50 butterfly on. Now, in Tesla, which is a $245 stock, that is a tight butterfly. Only 5 strikes, 40, 45, 50. So butterfly's constructed by buying 1, selling 2, buying 1. It's a 1/2/1 ratio.
Okay.
But more importantly, in the case of this call spread, it's a long call spread on the bottom and a short call spread on the top. And the short and long, the short of the long call spread and the short of the short call spread are the same options, typically.
Got it.
Okay. So iron condors kind of spread those out, but iron butterflies spread those out, but straight butterfly, they're sharing 2 spreads with the same short in it. Okay. So
Okay.
one spread's a debit spread, one spread's a credit spread, and we want the debit spread and the credit spread to be at their most optimum level together, and that's at that strike that you're short, right? And that's what we're
Got
seeing
it.
here. At 45 is the
This
max profit on this spread. So
this feels
the
like a really a
yep,
really clean strategy.
it's
It
clean.
just
It is. It's
yeah, I like
clean.
it.
It's easy to understand. It's generally used for some directional purposes, because depending on where you space this butterfly based on where the at the money is, if you put a call butterfly up above the at the money, you're kind of bullish. You're thinking the stock's going to inch its way up there. If you put it below, you're bearish. You think the stock's going to inch its way down. This is an inching strategy like this when you're long a butterfly. And all that
Okay.
means is that you don't want tons of volatility. You don't want the red zone moving things all over the place. You kind of believe with this strategy that we're going to kind of simmer right around here, go up a little, go down a little bit. As time goes on, if you're in this green zone from 240 to 250, this thing decays. You've got positive theta on your books, which is good. I like that. It's safe, right? So you can see where the theta is best, is kind of in this zone here. Got a little negative theta down here, and you get a little negative up here, right? So, we want this thing to kind of linger around here, just hang out. It's kind of like, the guest at the party won't leave, just kind of right in the middle. Just
Okay.
keep drinking your beer right there. Don't get crazy. Have another beer right there. And as this thing days go by, this is going to decay, right? And that means money to us. Okay.
Okay.
We're gonna get really into this and really see all the components of it,
And
in the butterfly show.
just to tie it, because you're and I can barely see the screen because I've got this light in front of me. But Tesla,
Well,
right?
then we'll go back to here.
So Tesla, the really cool thing about that is Elon has been known to invest in Dogecoin, and there's speculation that will be the currency on Mars. So another hedge.
You in the crypto stuff.
I'm still not sold though. Let me just make that clear, because I still want to know. I need someone to come on to tell me about quantum computing and how AI take over consensus and
right.
how do we protect ourselves from that?
Let's do
I like
this.
stuff in my hands. I'm old fashioned.
I know.
I like it in my hands.
I know. That's why I get the paper. I don't have it today. I've got all I have is my remarkable. All right, we're out of time there, Mal. Let's take a quick look at the markets. Max, can you throw up markets for us? Let's see what's going on. I think I see some red numbers out of the corner of my eye. Mild. I don't know. The Nasdaq's down almost 0.8%. 0.8% it is. 32 on the Dow. S&Ps are down 20. We had a nice update, I think, yesterday. And then VIX, my favorite. Oh, VIX is up a little bit. Nothing crazy. 1622, as expected. Again, happy August. That's what we got here. So nothing exciting there. It's another, you know what time it is? It's tee up the golf ball. That's it. It's one of those kind of days. Yeah.
Yeah, and we've got, I think, NVIDIA earnings coming up. So next week we'll begin with some daily news stuff that we'll inject in here. We just wanted to get some basic AI, crypto, and get things rolling, and then we'll
take a look at the earnings that are coming out, some of the stocks in the news. I know next week we're going to have a covered call strategy on an Apple position that is needed. We have a big profit in Apple, and we want to kind of seal that up a little bit. We're getting nervous. We're going to show how to do that, and then we're going to get into the broken wing butterflies all along the board. So there's all kinds of things to know about butterflies, and also you can create interesting butterfly broken wings based on your feeling of direction too. So it's pretty cool.
I do feel, since it's your favorite position, we should get a video of you doing a butterfly in a pool. I'm just saying. That we should.
I don't know if I can. I have bad shoulders. I don't know if I can get those old crotchety things over. All right, Mal, you have a good weekend. I'll see you Monday, right? For
bright early
Mania Monday. I don't know what we're calling it.
Yes, we're doing Money Mechanics Monday.
All right, Money Mechanics Monday. All right, I'll see you then. Have a great weekend. That's close.
All right, bye, Lex.
Bye.